Deborah has said, is John will give an overview of some key elements of where we are from a macroeconomic point of view. Robert then will add to that, and then I'll conclude with an assessment of the figures overall, and where we stand then as a country and what our response back will be. So thank you, Deborah, and over to John.
Okay, good afternoon, everybody. So what I will do is give about a 5-minute overview regarding the key fiscal developments then in the first quarter of this year. Firstly, by way of sort of the headline position, you can see there that total revenue is of the order 16.5 billion in the first quarter of the year. As would normally be expected to be the case, the bulk of that is by way of tax revenue, which is just under 13 billion in Q1. That is a 1.1% year-on-year increase relative to the same period of last year. On the expenditure side, total expenditure is about 19 billion in Q1, and again the bulk of that is on the voted current side, which is up by just under 12% in year-on-year terms. So that gives an overall exchequer deficit of 2.5 billion in the first quarter of the year. Now, trying to give you then a little bit more detail on the revenue side of the picture. As I mentioned, tax revenue is just under 13 billion in Q1. That's up 1.1% in year-on-year terms, but it's actually about 0.8 billion behind where we thought it would be at this stage. The biggest driver of the sort of relatively weak performance, of the behind profile performance, is on the VAT side. So I put up here the actual outturn for Q1 in the second column, how that compares to our expectations in the second and third columns, and then the change vis-a-vis this time last year in the final two columns. And I think you can see in red there the biggest driver on the tax is that VAT is nearly 1 billion behind where we thought it would be. Okay, I would stress that's not due to consumption over Q1. It is due to revenue forbearance that was introduced at the beginning or around mid-March. VAT, as you will know, is collected every second month. So the VAT that we have here for March refers to consumption, personal consumption in January and February. So it is as yet unaffected by the shutdown, shall we say, in parts of the retail sector in the first quarter or in March. Okay. And again, just giving a little bit more detail here, because Q1 is not at all homogeneous. Okay, so what we have here is the year-on-year increase in tax revenue in both January and February, and you are seeing increases in overall tax revenue and a little bit of an increase in VAT, but that has flipped around then in March. So a very different picture over the course of the quarter. On the spending side, current spending about 15.8 billion then in Q1, 1.1 billion ahead of where our colleagues in DPER thought it would be, and up by just under 12% in year-over-year terms. And you can see the bulk of that is in two departments, not surprisingly in health and in the Department of Social Protection. Very little to say actually on the capital side. About 1.2 billion is total spending in Q1. This is very much in line with profile. So to try and wrap it all up then, just a couple of points that I want to make. Tax revenue is just under 13 billion in Q1. That's a very modest annual increase, just 1.1%. The key driver of where we're at on the taxation side is the VAT and the forbearance measures introduced in March. On the spending side, total voted expenditure about 17 billion and about 1.1 billion ahead of where DPER thought it would be. And we think both of those are very much related then to the pandemic issues. So, as I mentioned at the outset, that gives a deficit then of about 2.5 billion in Q1, and that compares with a surplus of 1.6 in the same period last year. We're at the moment in the process of updating our macroeconomic and fiscal forecasts. Some of you will know the stability programme, which is a legal requirement under European law. We must submit that to the Commission and to the Council over the course of April, and that's currently being prepared at the moment. And because we will be revising most of the figures, including the tax figures, we will also issue revised profiles for taxation. With that, I'll leave it by way of introductory remarks.
Well, thank you, John. Just very briefly, John has set out the main aggregates in relation to expenditure, so just one or two comments to add to what John has said. Overall spending is about $1 billion above profile, as was mentioned, and this relates to higher expenditure in relation to health and social protection, and we will have further increases above profile over the next few months in response to the crisis. So the main increase in spending related to those two areas, as everybody be aware. But in addition, we have further acceleration of drawdowns from other departments, and this is an effect for the government to push more cash out into the economy. There is, as we all know, a liquidity issue now, cash issue. So a key part of our strategy is to get as much funding as we can out there to support small businesses and others who rely on the state. So the spending profile is above at this stage where we thought it would be because of the decisions the government have made in relation to health and social protection, and also decisions the minister has made in relation to accelerate the drawdown of spending.
Thank you, Robert. Across today, many of you will be reviewing the different figures that have been published, both by our colleagues in relation to the number of people who are on the live register, and then also contemplating the figures that we are making available today in terms of our exchequer returns. And I want to say a word about the figures that have been released today, acknowledging the number of people who are now unemployed and the number of people who are in receipt of the pandemic payment. I want to very much acknowledge that behind the figures that have been released today are many, many hundreds of thousands of citizens who never anticipated they would be in a position where they have lost so much income or they have lost a job. And I want to recognise that the speed with which that change has happened has been such a cause of additional anxiety to so many families, to so many businesses, and to so many citizens across our country here today. And what the figures of today indicate is the scale of cost that we are facing on an economic level due to the impact of COVID-19 in our society. As a government, we've always been very clear that our first priority has to be to keep our citizens safe, to keep them safe from the spread of COVID-19 and from those who do contract the virus, to give them care, to ensure that as many of them as possible, which the overwhelming majority of citizens do, we get them back to full health. That, of course, is where our first priority is. But what we're doing is recognising here today, through the figures that are being released, also the scale of economic impact there is, the speed with which it has happened, and the cost now that families and that businesses and that citizens are now facing. My message to all of those who are in that situation today is the absolute determination that we have to build a new economy as a consequence of what has happened to the spread of COVID-19 in our country. To build an economy in which those who are affected today can get back to work, can see their incomes grow again, and to build an economy that, as we are dealing with COVID-19, supports citizens at a time of need, supports them through their income, supports them in helping to deal with costs that they never thought they would have to be dealing with today. What we have done over the last number of weeks is put in place a variety of measures to help our country respond back to that. the government has put in place a very wide range of income supports very, very quickly to help people cope with the job loss or the income loss generated by COVID-19. The rollout of the pandemic unemployment benefit at such speed, which we then increased to a higher level, was a direct recognition by the government of the scale of income loss and the scale of hardship that too many citizens are facing as a result of COVID-19. The work that has been done in relation to mortgages, in relation to rates, in relation to invalidity and sickness benefits, again, are all responses back to the economic consequences of COVID-19. And then the work that was done with my colleague Minister Doherty and Minister Humphreys in relation to the availability of additional loan schemes, in relation to additional supports for businesses, again, are all part of our response at this stage to the impact of this virus on our country. Last night I confirmed the breadth of the income subsidy scheme and the number of companies who are now participating in it. The latest figures that we have now indicate that approximately 34,000 companies are in this scheme. We believe this scheme is a very significant intervention and indeed without precedent in our recent economic history to keep companies going at a time in which their income is drying up and to keep employees in a relationship with their employer. And we have recommunicated that scheme in the context of the public health guidance that was issued on Friday night. And across the coming days, myself and the Revenue Commissioner and both government departments here today will be continuing to recommunicate that scheme to employers who have now let people go and to employers who will be making really important decisions across the coming days. The breadth of companies in that scheme is a sign of why that scheme is needed. The breadth of companies in that scheme now, though, are the kind of companies that we will help through that scheme to rebuild back to a position of economic health as soon as our public health allows. In terms of the future and in terms of where we want to go to, want to again emphasise that as great as this economic challenge is, it is one that we will overcome and it is one that we will work our way through as soon as our public health allows it. And I have no doubt at all that we will create an economy in which all of those who are being affected today by the figures who we are indicating today, all of those will be in a position where we will help them see their incomes be rebuilt and work so hard to ensure that there is a job available for them as quickly as we can. There are three qualities that will be very important for Ireland, for the Irish state and for our economy as we respond back to this. The first one is that we are in this phase of challenge in the absence of the private sector credit bubble that caused such difficulty to us just a decade ago. Secondly, we have an employment market that is incredibly diverse and again is in a very different place to where we have been at other times. And then thirdly, our creditworthiness as a country is in a strong place because we entered into this phase of challenge with the financial markets seeing our commitment to eliminating a deficit, moving to a balanced position, and then moving to a place of surplus over the last number of years. And these are really important tools that will ensure that our country is able to navigate its way through the challenges that are approaching. So yes, the figures today indicate a challenge, but I'm absolutely certain that this is a challenge that as soon as our public health allows us to respond back to, we will do so, and we will create an economy in which income and jobs are growing again. Thank you.
the questions now. The first question is from Donny McConnell from The Examiner. The total fiscal cost of this pandemic is not yet known. The central bank says it is 8 billion plus already. What's your best estimate of what this could cost?
Thank you, Daniel, for your question. The central bank indication there of €8 billion, yes, I believe the expenditure consequences as a result of decisions that are already taken will definitely be in the vicinity of a figure like that, potentially higher the longer this public health emergency continues for. I should indicate, though, that we believe that the tax revenue that will be foregone as a result of economic activity going down is likely to be ahead of that figure. And the cumulative cost of where we will be high, but it is going to be completely determined by how long this phase of the public health emergency continues for, and how quickly the public health guidance changes. But the figures that you will begin to see flow through in tax revenue in May and June, and the revenue foregone, will also be considerable figures.
I'll come to that.
We'll come to that, Daniel.
Yeah. Second question is from Paul Colgan from Virgin Media. Will the €100 billion European Jobs Initiative lessen the burden here? What proportion of funding could we expect to benefit from?
Thank you, Paul. So that relates to a scheme that was announced today by the European Commission. We are evaluating that scheme at the moment. We believe that scheme will relate to loans, and loans that will be available at a particular rate to countries that are participating in wage subsidy schemes or in other schemes to try to keep jobs in place. We are going to have a look at that scheme because it has just been announced today. I'm not in a position yet to say whether we will decide to access it, but we're also going to be having a look at other ways in which we will be able to fund the kind of schemes that we're indicating here today. Very broadly, I have to say, the launch of schemes like that today from the European Commission are going to be very valuable. One of the things that will matter to Ireland as we move through 2020 won't just be how quickly our domestic economy rebuilds, it will be how quickly other really important parts of Europe rebuild their economy as well, because they will really matter in terms of their ability then to consume the goods and services that we will be selling to them. And for that reason alone, the launch today by the European Commission is a very valuable development.
Next is from Ian Guider from the Business Post. What is the department's forecast now for total amount of tax that will be collected this year because of the impact of COVID-19, and how much will the NTMA have to issue in debt to meet borrowing requirements?
So the figures for the Exchequer for today in some ways do point an incomplete picture, because they do point to where we have been in the past. They point, as John has explained, to a VAT shortfall that may largely be attributable to where we are with forbearance, and they point to income tax figures that largely look back to where our employment market was. So in terms of what our tax revenue will be for 2020, apart from indicating that we expect it to be significantly down versus what we indicated in our profile, we're not in a position to indicate by how much it will be down, because much of that will depend on what we can learn from the figures that come through in April, May and in June. The most likely point at which we'll be able to give an indication to that will be when both departments work together to produce the Stability Programme update that we'll be providing in April, and at that point we may be able to give some form of tax revenue guidance and some form of deficit guidance. But all of our efforts at the moment are focused on trying to support our domestic economy to try to ameliorate some of the effects on the deficit and on tax revenue. In terms of the NTMA borrowing strategy, they indicated there yesterday that they are indicating and planning to go to the market on a number of occasions across the coming months, which of course we're absolutely supportive of, but the scale of that borrowing need will depend on work that we will do regarding tax revenue and expenditure. And as I explained a moment ago, that's ongoing. John?
If maybe I could just give a few facts and figures to maybe put a little bit more detail on the NTMA's position. At the end of Q1, earlier on this week, the NTMA had 22 billion in cash. Now it does have significant redemptions this year. There is a 10.5 billion bond that comes due in April. There is a 6.5 billion bond that comes due in October, and there are 3 tranches of the UK bilateral loan, each about 400 million, that need to be repaid this year. But even when all that is taken into account, the NTMA expects to have of the order 8 billion by the end of the year at its disposal. And as the Minister mentioned, there are a number of bond auctions and some syndications over the next month. I think there's one this month, one in May, and then one in June.
Next question is from Stephen O'Brien from the Sunday Times. Do you have an estimate or broad range of the likely daily cost of the use of private hospitals to the state?
That figure is not yet available. The reason for that is it depends on the impact of COVID-19, the number of hospital beds that requires use of, and in particular the number of ICU beds that may be used across that period. And we won't be in a position to indicate what will be the daily cost until we're clear on what the actual usage is going to be.
Porrick Halpin from Reuters. Can the Minister give an estimate or range of the kind of budget deficit the Exchequer is potentially facing this year? And what impact does the department see the pandemic having on corporate tax receipts for the rest of the year?
So in terms of our deficit, as I said, we will provide at the earliest guidance on that figure in April when the Stability Programme update is issued. And apart from indicating that we expect to have a considerable deficit versus where we thought we were going to be for this year, which was a growing surplus, the figures for that will be available when we move into providing the Stability Programme update. In terms of corporation tax receipts, it is certainly possible that the tax heading that could be affected the least by what is underway in the Irish economy and the global economy will be corporation tax. And the reason for that is many of the sectors that have generated a corporation tax flow in recent years are part of sections of the global economy, the demand for which is likely to grow. So it is possible that as we move through the year, corporation tax receipts will be the least affected of many of the tax receipts that we have, but we will test that as we move through the year and we see how many larger companies perform.
And just to re-emphasise that point, because it is very important, the corporation tax that will be paid in May of this year pretty much relates to activity last year when the corporations did very, very well. Okay, so...
Donal O'Donovan from The Independent asks, does the Minister believe that a relatively quick V-shaped recovery is still realistic? And if not, will the nature of support change?
I believe it is still possible, but the nature of the recovery does depend on 2 public health elements. The first one is how long the continuation of the current phase of public health guidance goes on for, and the second one then is the degree to which habits change after that phase has changed, in terms of how people will feel about gatherings, how they will feel about travel, how they will feel about purchase decisions they may have been planning to make. So the answer to your second question is yes. The planning that we will have for how we need to accelerate a new economy will depend on the kind of recovery that we believe is possible. And I do believe an important consideration in all of that will be what happens in some of our larger export markets. But because of the experience that we have of the flexibility and the agility of the Irish economy and the 3 sources of strength that I noted earlier on, which is the lack of a private credit bubble, the value of our creditworthiness at the moment and the diversity and agility of our jobs market, we will look at many different measures to accelerate the speed of our recovery when we get to a point that that is possible. And there's a huge amount of work underway already in relation to that. And we're also already doing work in relation to what kind of schemes may be needed to support the ability of our banks, for example, to lend.
Just to add, Donald, what the Minister has said, I think it will certainly be a V-shaped recovery for many sectors, but it's unlikely it's going to be the same type of recovery for all sectors, because some sectors are going to be more adversely affected because behaviours in some cases will change, revert back very quickly, but others, for example, international travel, might be impacted for a longer period. So I think when we think about V-shaped, yes, for a number of sectors. So in a situation where the social restrictions are removed over the next while, whenever that happens, for restaurants, coffee shops, there could be a very rapid rebound. But of course, international travel, tourism will take longer. I think the duration, as the Minister has mentioned, the duration of what we're facing is the real unknown. We have a reasonable assessment at this stage of the impact on particular sectors, but it's the duration that is very uncertain. And as part of that uncertainty is what's happening in our major export markets and the trade effects, because some of those markets, this crisis might affect them, it might be longer for them, the effects, or we might be through the worst of it, hopefully, and other countries will still be experiencing significant difficulties. So the trade effects will have, again, differential effects depending on the country and our exposure to trade in certain geographics.
Stephen Murphy from News Talk. Given the live register figures this morning, how long does the Minister think it could take for the country to return to pre-pandemic employment levels?
How long it will take us to get back to where we were is absolutely influenced by how long this phase of COVID-19 goes on for. And our focus economically at the moment has two different layers. The first one is to support all who are involved in public health, in making the resources available to them to do what they need to do, to support citizens at a time of need. And then secondly, a wide variety of measures to look at either income support for those who have lost a job, or earnings and wage support for people we want to keep in a job. And to restate again, as of last night, we now have 34,000 companies in a scheme that only became available last Friday, when the legislation for that scheme passed to Shannon Aaron on Friday afternoon. So this is an intervention that is very broad in scale, and we will be reviewing regularly to look at how we can make it as powerful as we want it to be. What I believe we will be able to do, and we are planning to do, is to get back to a country and an economy that is generating good work and good income for all in our country. And we will do all that can be done to create that economy quickly when our public health allows that to happen.
Robert Short, RTE. Patrick Honohan, writing today, says the government may have to take over companies in certain sectors. What's the Minister's view? Will an emergency supplementary budget be necessary?
All of our efforts at the moment are currently focused in on how we can allow as many companies as possible to continue in their current format through the income subsidy scheme. So the very reason we have put in place an intervention of that scale is to keep companies, and indeed to keep organisations, going in their current way of trading for as long as possible. And it's worthwhile emphasising that the scheme that we launched last week has provision in it for those who are self-employed, has provision in it for higher levels of income, and those are provisions within our scheme that many other schemes in other countries don't actually have. And crucially, this is a scheme that started paying out money last week. We'll be paying out more money this week and considerably more money at the end of this week, when the next round of payroll operations go for all companies. So this is a scheme that is now paying employees. And the reason why we have put it in place is to keep companies trading in their current way. It is true to say, though, that we're going to do two things. We're going to review the scheme continuously to see if we need to amend it in any way. And we are also alive to the fact that there are parts of our economy that we do need to ensure that when our economy rebuilds, that they are going and able to allow that recovery to happen. And we will look at what we need to do for that part of our economy as we move through the current phase of COVID-19.
And then the last question is the second part of Danny's question. Reports have it that Fine Gael is considering supporting Micheál Martin getting the first shot at being Taoiseach in a new government. Can you shed any light on this and where the talks are at present?
So I can certainly say those reports didn't come from me. And look, we had a very good discussion with our colleagues in Fianna Fáil yesterday that went on for all of yesterday afternoon. The tempo of engagement between both parties is now accelerating, and I would anticipate a lot more engagement next week. But what has not been included in those discussions is any engagement on who will be leading the government and when. The Taoiseach has said that what is important for our party is parity of recognition in terms of both parties, but the focus of all of our engagement at the moment is how we get ready to build a new economy, support our country through COVID-19, and then respond back to the messages that we heard on February the 8th. And I would expect a lot more engagement next week on all of those issues.
Okay, thanks everyone.
Thank you.
Thank you.